Around 8 million Brits play fantasy football, making it the most popular and widely played fantasy sport. It's exploded in recent years, and I'm sure that's driven by the younger population having easy access to digital infrastructure, affordable smartphones, and fantasy sports apps. I imagine the ability to make weekly changes to your squad would be a dream for many Premier League managers. But why this interests me is that the full range of emotions regular fantasy football players experience, the real emotional highs and lows when things go well or not, reminds me of the experience of investing. This leads me to wonder whether a similar trend for speculating with football squads is driving younger investors to speculate in the financial markets. Today, stock trading apps sit alongside fantasy sports apps in your smartphone, giving you easy access to stock or cryptocurrency trading. Trading can be faster than placing a bet on a Saturday morning for that day's match. But with your investment portfolio, the fantasy can only go so far, and the stakes can be much higher. That's why I want to encourage you to think about the difference between speculating and long-term investing. I also want you to recognize that your investment decisions have real and lasting consequences in a way that your fantasy football choices probably won't. Building a stable investment foundation is key to helping minimize any bad outcomes and positioning your portfolio to benefit from the potential rewards of the investment markets. So I want to share 4 steps I believe will take you towards financial success and help you make prudent financial decisions. Number 1, understand the impact of your decisions. It may be easy to get caught up in using convenient digital platforms to pick stocks or time markets. But without a solid investment philosophy, you run a greater risk of getting caught up in the emotional roller coaster of speculation. The instant gratification can be really appealing, as is the convenience with which you can place a trade, but they're a far cry from being a strategic, long-term investment approach. I encourage you to make decisions that are guided by proven market principles and decades of research into how different assets behave and into portfolio design. 2. Think long term. Fantasy football season lasts just a few months each year, which is quite different from taking a lifetime view of managing and hopefully growing your wealth. Your investment decisions should be based on a time horizon that matches your goals. In other words, for the longer term. If you're speculating on individual stocks or industry sectors, this will naturally encourage a short-term mindset. I know from experience that successful investing almost always involves a longer-term mindset, grounded in a good understanding of how markets have performed over the years. 3. Know your investments. Digital platforms give you easy access to an ever-expanding range of alternative investments, from cryptocurrency like Bitcoin to single stock exchange traded funds, also known as ETFs. But if you want the best possible outcome from investing, you really need to understand the characteristics of stocks, bonds, property, and other asset classes that you invest in. You should also understand that the specific role of each asset group in your portfolio. That means doing a proper evaluation of each and every investment you make, not just quickly clicking a button or making a choice on a whim, or because someone has recommended the latest hot stock in the newspaper. 4. Seek out qualified financial advisor. I may be banging my own drum here, but it's worth considering that a qualified professional may be best placed to create and manage an investment plan for you. Any financial advisor worth their salt will help you be clear about your financial goals and your reasons for investing in the first place. Your investment plan should help move you towards those goals instead of simply gambling on the markets. An advisor is also more likely to help you focus your attention on the factors that you're able to control, such as diversification, portfolio rebalancing, and minimizing the tax that you pay. There are lots of things like daily market moves that are beyond anyone's control, but you can choose how to react in a tough market, and a good advisor will be well placed to help you maintain investment discipline. Investing is not a game, and it shouldn't be treated like one. If fantasy league makes following football all the more interesting, then fill your boots. But I would just encourage you to understand where in life you can afford to lose and where you cannot. Financial security is built over many years, even decades, not on any given Saturday. With a solid investment plan and discipline to match, you can set yourself up for long-term success without the anxiety and emotions that come with speculation. Thank you so much for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help you live a successful life. That often involves understanding your money. I hope you've enjoyed this video. If you have, please press the like button to help more people like you find my channel. I also host a podcast called the Retirement Cafe Podcast. You might like to tune into that. Check out the description below. And of course, you can sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.